honestly, I think this is healthy. Markets have been very, very hot for very, very long, and it's good to kind of put things in check a little bit here when things get a little too heated. Right, afternoon, the drama is certainly continuing here into this week with a really crazy Monday to kick things off, which we'll kind of unpack here in our question of the week. My name's Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. And before we get to our question of the week about really what the heck happened on Monday, I want to back up and go back to last Friday, because really that's where a lot of this drama started to continue to unfold after the Fed press conference on Wednesday. So on Friday, we had unemployment numbers come out, unemployment and payroll numbers. And basically, this took markets for a ride on Friday. Non-farm payrolls added 114,000 jobs versus expectations of around 170,000. And the markets absolutely freaked on this news. You may remember we got the ADP employment report on Wednesday, and that certainly showed a much lower number as well. So led to a little bit of concern, but that has shown a lower number last 3 months straight. And the non-farm payrolls on Friday came out with a much more optimistic view of things. This time, however, for the month of July was completely different. We got a terrible number on Wednesday for ADP employment report. Market shrugged it off a little bit, focused on the Fed. And then, of course, Friday, we got the unemployment number and the payrolls, non-farm payrolls number, suggesting that, maybe the labor market is running into a bit of a challenge. On top of the payrolls, we also saw unemployment rate creep up a little bit, so closer to about 4.3%. So this, again, this combination spooked markets for sure. And I think in general, what we're starting to see is a market that's a little more concerned about what Fed cuts may actually mean, and how higher rates for longer may actually be starting to impact the markets. So we'll talk about how this ties into what we saw on Monday here in a little bit as we wrap up. But nonetheless, obviously, jobs are a huge area of focus now. Certainly some cracks in terms of early signs of what's going on in the labor market, and we will need to continue to watch that moving forward as we get some more jobs data through the course of the month, and of course, gearing up for Jackson Hole, where the Fed Chair Powell will be sharing some thoughts as well. The other data point I want to touch on actually came out this week. So on Wednesday, we had crude oil inventories come down actually. And what we have seen, over the last couple of days is oil prices jumped quite significantly as a result of this. Now, on a bit of a pullback nonetheless, so take this with a bit of a grain of salt. But of course, as we see inventories come down, supply and demand measures or weighs a lot into the prices of oil. And so we saw oil prices jump as a result. So before we get into the question of the week, be sure to tune in next week. We do have producer price index and consumer price index data. So of course, here we are again. The focus is really all about jobs, inflation, and the Fed. And next week we have a lot of inflation data coming out. So be sure to tune in. We'll certainly catch you up on what we see there on the inflation side of the story. But before we break, I have a really good question of the week, which is basically just questions about what happened on Monday. For those who were paying attention to the markets, markets had a pretty dramatic day on Monday, and some ups and downs since, but nonetheless, Monday was a challenging day to say the least. And I think what we saw is, let's say, threefold. And what we happened to experience was the combination of how all three of these things at once impacted both stock and bond markets. So basically, one of the factors of what we saw on Monday, I think, was that there was concerns that the market may be thinking that rates were too high for too long, right? If we go back to this unemployment and the non-farm payrolls number on Friday, obviously the market maybe is starting to consider that if the Fed does cut rates, it may be for a reason, and that reason may be that the economy is starting to cool off a little bit. Now, again, one data point, we'll need to wait and see how things shake out over time. But I think that the market is starting to price in the reality that, rate cuts are not always necessarily a good thing. A lot of times it comes for a reason. And so, honestly, I think this is healthy. Markets have been very, very hot for very, very long. And it's good to kind of put things in check a little bit here when things get a little too heated, right? So I think that's part of it. Second part of it is that there's been a lot of concern over earnings, and especially earnings in the big tech space. Although some of them have beat expectations, the reality is I think a lot of people expect a lot from these companies. And, even though they beat the expectations, may not have been able to deliver on some of the projected growth that a lot of people are expecting moving forward from these, especially these big, 5 names that are out there. And a lot of revisions or guidance for the year ahead certainly impacted some of this as well. And lastly, I will point that there's a bit of an arbitrage going on right now. And so basically, on Monday, the Bank of Japan also announced that they're going to raise rates. And so we're in a period where the Fed's talking about cutting rates, the Bank of Japan is talking about raising rates. It creates this very interesting relationship where there's actually a bit of an arbitrage, right? When rates are going up in one country versus going down in another, you might imagine that can create some inefficiencies. And certainly, maybe what we saw on Monday was part of this as well, in terms of, some people maybe speculating on that arbitrage and playing that game a little bit in how it relates to the US market specifically. So again, rates may be too high for too long, as far as what the market saw on Monday. I'm not saying this is the case, but maybe concern around rates being too high for too long and what the Fed may do, concern over earnings and guidance moving forward. And lastly, is this kind of arbitrage between the Bank of Japan and the US central bankers in terms of policy ahead. So that certainly led to an interesting day on Monday. Now, again, we've seen some ups and downs along the way since, and hopefully, we won't see this kind of continued degree of volatility, but obviously time will tell. And certainly next week, we've got a lot of good information around inflation coming out. So be sure to tune in next Thursday. We'll talk a little about those inflation numbers and how that may translate to market movement from there. In the meantime, have a great weekend, and we'll see you next Thursday at 3.